Welcome to the Deep Dive. Today, we're tackling a space that's constantly evolving, that intersection where traditional finance kind of bumps up against the world of crypto and blockchain.
Right. But we're not just talking about the hype today.
No, exactly. We're zeroing in on the practical stuff, focusing on compliance and, how these worlds are actually starting to bridge the gap.
And to guide us through this, we've got a really great source. Insights from an interview with Irina Berkon. She's the CFO of Metallicus.
Metallicus, yeah. They're building a digital asset banking network, right? Using blockchain tech.
That's the one. So they're right in the thick of it.
Okay. So our mission for this deep dive is pretty clear then. We want to unpack how blockchain is really moving beyond just being a buzzword.
Becoming actual financial infrastructure.
Yeah, and how finance pros are actually navigating this space right now.
And maybe most importantly, what it all means for you listening in.
Right. Let's dive in. Okay, so let's unpack this. One of the first things that jumps out from the source material is this idea that, AI is getting all the headlines, right? All the attention.
Sure is. Dominating the conversation.
But behind the scenes, there's actually real, tangible progress happening in crypto infrastructure.
And the message from the source is pretty direct.
Yeah.
Finance leaders really need to be paying attention to this space too.
What I found interesting is how Metallicus, being a crypto company, isn't just selling blockchain services, they're using it themselves.
Yeah, that's a key point. They use it internally for, critical finance functions, like treasury management, controlling funds.
Eating their own dog food, so to speak.
Exactly. It shows real belief in the tech.
The interview gives a really specific example of this, using a multi-signature or MSIG blockchain wallet. Can you walk us through what that actually looks like?
Sure. So imagine someone in the company needs to initiate a transaction, maybe moving a decent amount of digital assets.
Sure.
They start the process.
Yeah.
But with an MSIG wallet, it doesn't just, happen instantly.
Right. There are controls.
Yes. The system automatically routes that transaction request to a preset group of people, the signatories.
Like needing multiple managers to sign off on a big payment in traditional banking?
Pretty much the same principle, yeah, but baked right into the technology itself.
Yeah.
And the crucial bit is the funds are locked.
They can't move yet.
Nope. Not until the required number of those signatories review it and approve it using their unique digital keys. And it all have to follow rules set up beforehand, like who needs to sign off for what amount.
So you avoid that situation where one person could just move funds unilaterally.
Precisely. And the CFO really emphasizes this as a huge benefit. It's that assurance, knowing no single individual can move assets independently.
Which must massively enhance security.
Oh, absolutely. Big time. Provides a level of control and verification that helps prevent mistakes or, even fraud.
And I imagine that helps downstream too, like with reconciliation.
Definitely. Because the entire approval process is part of the transaction record, right there on the blockchain, immutable.
So you get a crystal clear audit trail.
You got it. From proposal to final execution. It really cuts down on those reconciliation headaches later on.
So connecting this back to you, the listener, if you've worked in traditional finance, you've probably seen those layered approval systems. Multiple sign-offs for big wire transfers. Well, this MSIG process is essentially the digital asset version of that.
It really hammers home the point that the same kind of rigorous oversight, those control principles from traditional finance, they're not just nice to haves in crypto treasuries, they're essential.
Non-negotiable.
Right. You need that full visibility. Where are the assets? Who tried to move them? Who signed off step by step? It's applying that financial discipline we already know to this new asset class.
And the tech helps enforce it.
Exactly. The key insight here is that these controls aren't just being applied to crypto. They're being dizzed into the tech with things like MSIG wallets. That's creating that vital compliance layer.
Okay, so that makes sense for managing things today. But looking ahead, how do you even begin to forecast in a space that mixes traditional finance predictability with cryptos?
Well, unpredictability.
Yeah, that's the million-dollar question, isn't it? How do you forecast when you're dealing with crypto volatility, but also trying to run a sort of normal business?
Right.
Well, Metallicus's approach, according to the interview, seems remarkably grounded. They talk to their customers a lot.
So less about crystal balls and crypto charts, more about actual client conversations.
Exactly. Their main clients are financial institutions, credit unions, community banks. So their forecasting isn't really driven by guessing Bitcoin's next move. It's driven by understanding what those institutions need when they plan to adopt certain services, that kind of thing.
Okay, and from a revenue perspective, then, does it look like a typical software company, or is it still tied heavily to crypto price swings?
The CFO explains it's actually structured much more like a standard B2B software business from a revenue angle.
Yeah. They focus on the usual metrics. Sales pipelines, product pricing, building predictable revenue based on those customer contracts and implementations. The tech is blockchain, sure, and it's crypto adjacent, but the business mechanics, pretty familiar territory for finance folks.
But wait, they do hold crypto on their balance sheet, don't they? How do they deal with that exposure, the volatility we all know about?
They do hold crypto, and they manage that exposure basically the same way any company would manage any volatile asset on its books.
Okay, so risk management principles apply.
Right. You understand the risk, you monitor it closely, you have a strategy. Now, she does mention they hold more crypto than cash.
Which sounds maybe a bit risky.
Well, it might sound that way initially, but you have to remember, they are a crypto company. They genuinely believe in the underlying tech. And crucially, they have the in-house expertise and the systems, like those MSIG wallets, to understand and manage that specific kind of exposure. It's calculated.
So just to clarify, their core business forecasting relies on customer demand.
Okay.
But the decisions about how much crypto they hold as a company, that's more of a strategic investment call.
Precisely. Those decisions are made together by the CEO, Marshall Hayner, and the CFO, Irina Berkon. They're watching the market, of course, but it's a strategic allocation decision guided by their board as well.
Interesting. A blend of B2B SaaS predictability and strategic crypto conviction.
Yeah, it's a fascinating mix. The takeaway seems to be that managing crypto volatility requires those fundamental risk management skills, just applied with a deep understanding of this specific asset class.
It really feels like we've seen a few phases with blockchain and crypto over the years. I definitely remember that time when it was pitched as the solution for absolutely everything. Huge hype.
Oh yeah, peak hype cycle.
But maybe not always backed by, let's say, legitimate action or real belief from established players.
That's a point the CFO reflects on quite a bit in the source. She felt that earlier wave often lacked substance, particularly when it came to actually integrating with, the existing financial system in a practical way. Lots of noise, not enough real building.
And she draws a pretty sharp contrast between then and now, saying the interest today isn't just growing again, but the response feels, well, stronger, more serious.
It does feel different this time around, doesn't it? Even with AI grabbing so many headlines. And understanding why it's different now is really important.
So what are the reasons?
Several things seem to be converging. First, and maybe most importantly, the regulatory landscape has started to mature. It's getting clearer.
Moving away from that total ambiguity towards actual rules of the road.
Exactly, and that's massive. The tone from regulators, from policymakers, it feels more supportive now, or at least less overtly hostile, more constructive.
Which must give banks and credit unions more confidence.
Significantly more confidence. They can start exploring and actually implementing these blockchain solutions without feeling like they're stepping into a complete legal gray area. The risk feels more manageable.
And it sounds like there's been a kind of a Darwinian process too, a weeding out?
Definitely what she calls a shakeout. Those companies that were just surfing the hype wave maybe didn't have the tech depth or the focus on compliance needed to build something lasting.
They're gone.
Many of them are, yeah. What's left, she argues, are the real builders.
Okay, what distinguishes a real builder in her view?
These are the companies that have done the hard yards. They've developed technology that isn't just cool or riding a trend, but is designed specifically for institutional needs.
Meaning
Security, scalability, auditability, and crucially, compliance built in from the start. They're ready to actually help banks and credit unions implement this stuff properly.
So it's like a perfect storm in a good way.
Mm-hmm.
Banks feel safer because the rules are clearer.
Mm-hmm.
And they actually have solid, credible tech partners to work with now.
It's a powerful combination. Absolutely. It's changed the whole dynamic. And the CFO really nails it when she says there's a real compliance layer now. It's not just about cool tech or internet culture anymore.
Right. It's infrastructure.
Exactly.
Yeah.
Real infrastructure, real products being put to use by major financial institutions. That fundamental shift from internet hype to compliant infrastructure, that's what's driving real adoption today. Regulatory maturity plus capable, compliant tech providers, that's the engine.
This shift in the industry, it's often reflected in people's individual career paths too. The source shares the CFO's own journey, which started pretty traditionally, public accounting at Grant Thornton.
Yeah, her entry into crypto sounds like something out of, well, 2018. She talks about a sidewalk meeting in San Francisco.
Yeah.
Random encounter. Someone asks if she's in finance. She says yes.
And boom, offered a job.
Pretty much.
Yeah.
Asked on the spot if she wanted to be CFO for an ICO company.
Her reaction was priceless. Cool. What's an ICO?
Right. It perfectly captures how sudden and frankly unstructured things could be back then. And that first role wasn't your typical CFO gig.
How so?
It quickly became heavy on business development, marketing, really building everything from the ground up, traveling the world, pitching the product. Very much that early Wild West phase.
Okay, so how did she pivot from that maybe more chaotic beginning to Metallicus, a company that's all about licenses and compliance frameworks?
Well, the connection happened at a conference, Consensus, in 2019. She gave a talk, and afterwards, an auditor from the firm BPM approached her.
Okay.
Said they had a client, Metallicus, that needed a CFO to help them get through an audit. So she met the CEO, Marshall Hayner.
And what clicked?
His vision. He told her he wanted to get money transmitter licenses in all 50 states. He wanted to build a legit crypto company, focusing squarely on a strong compliance framework from day one.
Wow. After her earlier experience, that must have sounded like music to her ears, that focus on legitimacy.
Absolutely. A total contrast to the hype she'd seen before.
Yeah.
So she joined in January 2020.
And what's kept her there, according to the source?
Seeing that vision actually play out, moving past the hype, building that real compliance layer we keep talking about, seeing serious products get built and actually implemented on traditional financial institutions.
Which presumably requires a different skill set than the ICO days.
Totally different. Now it demands people with serious chops in public accounting, understanding regulation, finance operations. Those foundational skills are critical for building this kind of robust infrastructure.
Right.
She mentions, she still has ties to the crypto roots, like being on the Dogecoin Foundation board, which is interesting. But the day-to-day work now, it requires deep financial and regulatory expertise.
This whole discussion about skills leads nicely into another point. The source brings up this broader challenge around the talent pipeline, especially in accounting.
Yes, she offers some really candid thoughts on that.
Mm-hmm.
She's seen, perhaps among some younger professionals, a bit of an expectation that these big, glamorous opportunities will just sort of fall into their laps.
Mm.
And she's also encountered people with crypto CFO titles who, frankly, didn't grasp the fundamentals of finance and accounting.
Ouch. So while firms definitely need to pay well to keep talent, especially given the demands.
Absolutely. Pay is crucial.
She really stresses the need to put in the foundational work first. You can't skip steps.
That's her core message.
Mm-hmm.
You have to learn the fundamentals, build relationships, be consistent, put in the hours. She sees that foundational experience, especially in public accounting, as absolutely essential preparation. If you try to bypass that,
You might not be ready.
you might not have the skills, the discipline, or the resilience needed when a genuinely complex, high-stakes opportunity like building compliant financial infrastructure actually comes along.
And she personally found her public accounting time valuable for building discipline, confidence.
Very much so. She even shared a story about being a young associate at Grant Thornton and unexpectedly finding herself in a room with the CEO of Whole Foods at some industry event.
Wow, that's perspective.
Right. Seeing where that path can lead, the kind of access and opportunities it can open up. She feels firms need to do a better job of actively showing people that long-term payoff, demonstrating the exciting places that foundational finance skills can take you, including into cutting-edge fields like this.
Makes sense. Show the destination, not just the grind.
Exactly. And she connects this to a really interesting trend. As more top talent gets drawn to the shiny objects like blockchain and AI,
It creates a vacuum elsewhere.
it potentially deepens the talent shortage in essential areas like traditional accounting and finance ops. So for firms, and for you listening, it's a clear signal. Those foundational skills honed in traditional finance, they're not becoming obsolete.
They're becoming more valuable.
Arguably, yes. They're the bedrock needed to build these next-generation industries responsibly and compliantly. The key insight is that foundational discipline is more critical than ever as the launching pad for success in these new frontiers.
So as we wrap up this deep dive, we've really traced quite a journey, haven't we? From those early, maybe overheated hype cycles around crypto and blockchain
Yeah, definitely.
to seeing how a genuine focus on compliance is now helping establish this technology as, well, essential financial infrastructure.
We look at some practical examples, like those multi-sig wallets bring familiar controls like layered approvals firmly into the digital asset world.
Right. And we talked about how companies like Metallicus are navigating this complex space, grounding their strategy in customer needs, applying serious financial discipline, even amidst volatility.
And really building trust through robust compliance. That seems key.
It does. It feels like compliance has really shifted from being seen just as a burden or a cost center to becoming a genuine competitive advantage. It's what's building the trust needed for mainstream financial institutions to finally step in seriously.
And this whole move towards compliant digital asset banking networks built on blockchain, it's clearly not just talk anymore, it's happening. And it demands those serious skills from traditional finance backgrounds.
Absolutely. Which brings us to our final thought for you to mull over after hearing all this.
Yeah.
Given this increasing regulatory clarity we've discussed, and this tangible move towards compliant digital asset infrastructure, the kind Metallicus is building, which core traditional financial service or product? Maybe think about lending or payments or insurance or something else. Which one do you think is next in line to be really fundamentally transformed by blockchain technology?
That's a good question.
And maybe more personally, how might that specific transformation, whichever one you pick, end up impacting your own financial world or perhaps even your career path in the years to come? Something to think about.